Hello everyone, welcome to today's analysis of the NQ and a little bit of related markets. Whoa, it's Wednesday. The 5th? Yeah, 5th of March. Didn't make a video yesterday. Honestly, might be kind of on and off more than I expected for the foreseeable future, really. I'm going to be making updates as much as I can, but yeah, my life ain't going to be getting quieter over the next while, I'll tell you that. So let's see, what did they do? Nothing crazily unexpected. So we had this purple box down here is our RTH gap. Sec, let me reload that. That's in the wrong place. Yes. So this box down here, this purple one, is RTH gap that we hadn't filled fully. We just we filled a bit more of it. I still feel like they could come lower from here. We got a bounce though, and it is external liquidity. Scary thing is we do have an internal wash here. We can come down and fill this gap, 19,920 or so. But the actual base of the pull that we're currently in now is 19,400 all the way down to 18,900. And if I want to play devil's advocate, we can come into this. There's a lot we can do. But for now, we got a small little change of character here. I don't know if I'm crazy crazy about the... Actually, is that hidden? No, not yet. I don't know if I'm crazy about the change of character we got here, but while we're in it, let's respect it. So we came into this gap. We actually got a small little change of character here. Now we've mitigated this order block that was inside here, and we're just ranging around here at the moment. This would be a good time for them to recover and come up to one of these levels that I've marked up here. Any internal stuff here I would be a bit iffy on. You could take small scalps obviously, but I would wait until 21,120 is taken and we come into this pull. The thing about this pull is if we don't get a strong swing fail from this point, then we could keep trending up to this volume gap up here, which is just a huge level. We have a lot of liquidity here, loads. It's kind of the source of this whole push down, 21,400 or so. There's a nice order block up there. We have anchored VWAPs, but even at that stage, if they come up there, there's a chance that we push higher. But there is does that block look nicer on any time frames? No, not really. We could tap into this gap here. Well, that's just where the block is. I would be I'd be a bit cautious about if we started breaking up deeper and deeper into this red vector here. I would be kind of cautious about shorting it until we get a very, very strong reaction, possibly from this point. But we could keep going. Immediately, if they wanted to just range inside here, I guess you could get a reaction off this zone, just below 21k, I guess. But we have a lot of liquidity stacked there as well, so I wouldn't be betting a lot on it. We have point of control of this little zone here, but what did this do? Well, it didn't really change structure convincingly enough for me to be long or shorting internally, especially with this. So if we did start breaking up, which I think we could, I would be focusing on this area up here. These are flat as well. Just these are flat, but I could see them. They induced this block up here, and there's an RTH gap up here as well. I don't know if you can see that, but this purple box here is an RTH gap that wasn't fully filled. Right, it's this just seems like such a zone to swing fail both of these highs here and pull back. Could be this week, could be next Monday, could be in a few weeks' time. I don't know what they're going to do with here. They could just keep this momentum, this downward momentum, and come deeper into like the 3-day block and stuff down here. That would be kind of crazy. If they did just push it down into here and into this zone down here, 19,200, and then aggressively start making bullish structure, I would be really bullish, depending on what I see. If they just left all of this to come down to here, maybe swing fail this and then get kind of this kind of thing going on, I'd be very bullish if they did this. But this is the kind of place now that they could have some recovery up into structure, weak enough structure on the way up, get a swing fail, and then bring it down. Something like that is definitely on the cards. Yeah. Oh, this is useless now, actually. I'm just after realizing that. This one, let's bring it back to this guy. Oh, yeah. We have past daily VWAPs below us. We have the mid band here. We have a juicy looking consolidation down here, right on the liquidity grab that US did. Naked consolidation, point of control. It's a high volume node. All of the good things. This is definitely a zone that we could get a bounce. Yeah. But if we came down soon, and just tiny mitigation and then start breaking down from here, there is a chance that we just break through it. If we come down quickly, or maybe news does something, so I mean UK does something like this, and then news up, we could create something like this. The timing of the timing of these drawings that I'm doing right now is not accurate, but it's just it's just an idea. Okay. I am very aware that they didn't fill this gap below us, and there's a chance that they swipe deeper again. The divs here weren't beautiful. Money flow diverged, but it seemed a bit forced, if I'm going to be honest. It didn't seem like price was really ready, or is really ready to make that big move up that everyone's going to be looking for to, come very high. But it could be enough for a short squeeze. So I'm keeping that in mind. So what am I looking at today? Well, I haven't done my analysis of the Asian markets yet. But we can do something quick. Okay, so we have a nice Sydney low here, which took liquidity. I remember looking at this chart. Actually, there's a small SMT down here between NQ and the ES. Okay, so China opened around here, and this was a little spring that we had, and we were after taking highs here on UK into this vector recovery zone. Around Tokyo close, what did we do? We had somewhat of a change here, and then inducement push up again, liquidity grab. So we could come up from here, but because this is the this Sydney low is kind of our outside of a potential range, we can come down into this past daily VWAP and get a spring from there too. This whole zone here lacking a lot of volume. Small little volume gap here around the past daily VWAP, as you can see. So a wick into this zone actually would be pretty nice. Right now we're not really moving far, and this was just kind of a spanning move on both sides of the supply and demand here. So I mean, seems like we could just range in here until US decides what it's going to do, which could easily look something like this, and then that, potentially. Depends on what UK does. UK can still just grind away and then hit some arbitrary volume gap, and then that rolls us over, right? You know, something like that is also very possible. But I'm gonna wait. I don't know if I'm gonna do much trading on UK. What's going on here now? This was an SMT here here to here. That was an SMT on the ES. And ES hasn't taken an Asian high, Tokyo pre-market, and we have Sydney's high was taken by NQ and not by ES. So if NQ starts moving up now, I could actually see us trending from here, just straight from here. Maybe even coming up and taking pre-market Sydney's high. Definitely possible. So this is where US started selling. US likes to revisit those points because they can. They have enough capital to just drag price up there and be like, okay, we got it, and then bring it down. So, there's a chance that if they do want to maybe come into that RTH gap again below us that we're in, that we actually just trend up, and then US does something to bring it down and take that low again. That is possible. I would just be a bit iffy on aggressively shorting from this zone internally, because now we have tapped external liquidity. All right, that's what I see. You have my polls on these charts in the server as well. If you have any questions, please ask. Oh, do you want to? Okay, let's look at the other markets. So, the yen has started to do things again. We took liquidity here internally. This little mini distribution didn't last very long. This gave a shock through the stock market a small bit. And there is a chance that this is some huge plays by the yen. It could be pretty large, if I'm going to be honest, and the implications of it could be kind of even larger. So I'm keeping my eye on the yen. The dollar it's not doing well. It doesn't seem so. Yeah. Yeah, we could spend some time in consolidating in the dollar. But I would be paying more attention to the relationship between the dollar and the yen, and then focusing on what the yen is doing, because this can spell danger, especially with the situation that we're in. What else do we have? We have gold doing stuff. I wouldn't be surprised if gold kind of ranged out a small bit. We have a lot of kind of liquidity here, free liquidity to just kind of eat into. Could move sideways for a bit, I guess. The yields found some support, but the yields have just been selling off, even though the stock market's been moving up, which kind of tells me that no matter any risk, even if it's the quote-unquote safe risk, people are not looking for risk as much as they were back here in early January. Well, more so back here in December, right? They were selling up here. Yeah. So, this could come up, take the high again, and then distribute once more on gold. Definitely could. We've had such a long, drawn out push up that we kind of need an equally long kind of maybe M formation to bring us back in. So maybe risk off hasn't done its job yet. We could still be risk off overall, which you know what that means. Stock market can move down and it would make sense, but also don't forget they can short squeeze the shit out of it. So that's why it's important to do your TA. Okay, that's it for me. Yeah, happy trading, guys, and I'll see you tomorrow. I hope. I'll do my best to be making the videos every day. Yeah, happy trading, and see you soon.